This is the Daily Market Rundown live from the Tradelo trading floor. It's June the 25th. Some highlights from today's show. Powell signals June CPI data is key for cuts. The big beautiful bill is set to pass the Senate, and Nasdaq hits record high prices. Good day, traders, and welcome. You would be forgiven for perhaps being somewhat a little bit tired as you get to your screens this morning, because these markets seemingly are fast asleep. Ranges are, of course, very muted. Volumes are even more muted. It very much is the case that the markets have sort of digested the Middle East conflict over the course of the weekend, and of course Monday, and now they are very much just doing nothing. Okay, now that's important because sometimes markets do nothing, and what that means is the opportunity scope becomes somewhat limited for us as traders, and we have to accept this. This is part of the game, and we really do need to pick those battles. Now, in these sorts of conditions, typically what day traders are going to be doing is they're going to be removing the idea of very aggressive type order entry. Perhaps breakouts are less effective, and it very much becomes about picking those areas, picking those opportunities, and sort of just waiting ultimately for the better type of markets to return. Now, with that in mind, let's get stuck in and talk just a little bit about some of the key news. There's a couple of things that we need to just keep up to date with, because as we know as traders, at any moment things can change and they can shift, and we need to know ultimately what that opportunity scope looks like. Now, let's get stuck into it and talk about Powell. He, of course, did testify yesterday, and again, he is up today. Very much will repeat what he said yesterday, and he did get grilled by a number of Republicans about why he's not listening to President Trump and cutting immediately. Now, the key thing to take away is he pretty much said exactly what he said at the FOMC meeting just a week ago. But there's two things I think are very important to take out from yesterday's meeting, and they do matter. And the key was ultimately, he said, July meeting, no cut. Okay, now that matters because we did have two very dovish statements hit the line on Friday and of course on Monday. Both of them leaning on this idea that they'd be willing to, bring forward a cut into July meeting. The markets did move on that, and I suspect what's going to end up happening now is a little bit of that pricing that went into July is perhaps going to get pared back over the course of the next one or two sessions. Now, that did have some implications, particularly for the dollar. If you look at what the dollar's done the last two sessions, it did weaken quite a bit on that. So I do suspect the dollar is going to see a little bit of a bid over the next couple of sessions. But again, like I said, these are not conditions you want to be aggressive. So perhaps looking to sell into any rally in the euro and the pound today is ultimately some of the opportunity scope. Now, what was interesting, and I think this is the real key takeaway from what Powell said yesterday, is he's really leaned on this idea of June. Okay, what he's kind of saying is, look, everyone, including the analysts, including us at the Fed, we expect to see a pass-through effect from the tariffs in June. In other words, it's June and July ultimately that are going to determine when the Fed cuts next. Okay, now what this means for us as traders is that these do become very, very much live data points. And what we mean by live is that the rates markets will be extremely sensitive to the June CPI print as well as the July CPI print. Now, how this works is very simple. The base case is that the number is going to come more or less in line with forecasts. If it beats the expectations, ultimately that suggests that perhaps inflation and the pass-through effect from producers to consumers is a little bit higher than expected, and then the Fed will be justified in waiting for more information. However, should we miss the expectations, even by a 0.1, okay, the markets are going to latch on to this idea that there was a limited pass-through effect from producers to consumers. We also know that inflation has been soft the last three prints in a row, and the market is going to get to work not just pricing in one cut. And this is important to stress, because if you understand ultimately the sequencing of how interest rate cycles work, right now the Fed believes that there are around 100 basis points to get to neutral. In other words, they still think they're about 100 basis points restrictive, 1 full percentage point, 4 cuts. Okay. Now, if all of a sudden inflation starts to miss, we know Powell yesterday told us, he explicitly said, if President Trump hadn't brought the whole tariff situation into play via Liberation Day, ultimately we would have already been cutting. We would have already cut rates this year. Okay. In other words, if that inflation misses, not only is the Fed going to get to work cutting a lot sooner than expected, but more likely they're going to cut at consecutive meetings. In other words, they want to get back to neutral as quick as possible. Okay, right now we can see there's a bit of softening in the hard data, and if it wasn't for this higher than expected inflation, rate cuts would have already been coming. And that's important to stress because the degree of the miss on the inflation will ultimately determine how quickly they go. Don't forget, the Fed will not hesitate to cut 50 should we get quite a big miss in inflation. Okay, and that's the key takeaway. It's very much June is a live meeting as well as July. Should we miss in June, all bets are off. The market's going to very aggressively get to work in pricing in rate cuts for pretty much that July meeting. Okay, but we'll talk a lot more about that as we get into that July Fed meeting. Now, just a quick note before we move on to our topic number 2, and it's all about rain trading. Do you have the trading skills, but you just don't have the capital to leverage your trading skills? Well, Rain Trading is the only traditional prop firm that invests in futures traders. If you join Rain today, you're entering an ecosystem with 8-figure traders, access to the trading technologies platform, one-to-one mentorship, and unlimited scaling potential. You're serious about a career as a professional trader? Go into the description and click on the link and find out more about Rain Trading. Now, in terms of course, the oil, we know that has been front and center, of course, for the last couple of sessions with the Middle East conflict. To a large degree, the ceasefire is being adhered to. What's key with oil now, and I think there's one or two things to take away, is that we, of course, did see a little bit of flare-up yesterday. We saw the President of the United States very, very upset on his way to NATO. But I think the key takeaway is that there is now this report from the Pentagon that effectively CNN has latched onto, and it's this idea that the impact on Iran's nuclear capabilities and its ability to enrich uranium is being somewhat set back but not destroyed. Okay. Now again, I think this is a little bit against perhaps what the likes of Israel and US would have liked. They would have liked to have completely destroyed and annihilated the program. But by the sounds of it from the Pentagon itself, and this is what CNN is reporting, they've pretty much just set it back a couple of months. Now, why does that matter? Well, it matters a great deal because what it means now is that one of two things are going to happen. We're going to, of course, begin with diplomacy. We're going to begin with sitting down at a table. And there's going to be very, very aggressive terms imposed on Iran, including, of course, a lot of monitoring of their already enriched uranium, as well as the ability to enter into their facilities, particularly the ones that where they enrich the uranium. And this is going to be very, very hardline. The US and Israel are going to demand ultimately a very strict regime with that, because there is a concern that perhaps they've only set back Iran by a couple of months. Okay. Now the key to all of this, all right, is that the Middle East conflict and the Middle East flare-up has not gone away. Don't forget, it was just last year that Iran and Israel had a little bit of a tit-for-tat. The key to all of this is if Iran accepts it. Okay. Now they may accept it, they may not accept it. We don't know, but ultimately, if they do not accept it, well, what comes next then is, well, then we go in and bomb it again. Then we completely try and destroy it again. Okay, and this is going to be how it's going to go back and forth. This Middle East conflict is not going to go away anytime soon. It's just going to sit in the background until, of course, we get to those negotiations, we hear the red lines, and we find out about who agrees to what. Okay, now why does this all matter? Because I think there shouldn't necessarily be a geopolitical risk priced into oil, but it does mean that you don't necessarily want to be overly bearish oil currently. Okay, there's a lot of things that still need to happen, that we still need to understand in terms of what's going on in Iran. But what we do know is the red line is that Israel and the US demand no nuclear capability from Iran, and we know Iran is saying, well, we're going to continue to develop the technology because we're entitled to do so. Okay, so we have two red lines that are butting heads, and what that typically means is that we're not going to find a consensus anytime soon, and so I don't think this is going away. Like I said, I think it's just going to sit in the background. Now, for today, and we'll get over to the charts in a moment, but for today and for the next couple of sessions, you can expect a lot more consolidation. Okay, oil has done a lot. I mean, from high to low in terms of the Sunday open to where we are now, we've almost had a 20% range. That is significant, and typically agree. That is, that is pretty much the range for the week. I doubt we are going to break out of that range for this week. And what comes next is now we just sit in what we call a hangover market, where we just sit and distribute. Now, with that in mind, there you can see it. Okay, there at the top you can see we've got the open on Sunday, and of course we made that low late in yesterday's session. Now, what I want to just showcase to you is that we did have a typical auction all the way down. So we had a lot of low volume areas, a lot of volume distribution on the way down. And over the course of yesterday, we started this process of distributing. Okay, now I've just got those lines in there. They're not trend lines. They're not prices to buy and sell. They are just illustrating for you ultimately this distribution between this price point around 64 and this price point around, call it 60, let's just call it 67. Okay. Now, what this means ultimately is we're probably going to spend time inside this range and perhaps just start to scrape our way back up towards that weekly low around $68 a barrel. Okay, the market needs to establish a range now. It needs to establish a tradable range, and then guess what? It's probably going to trade inside that range until further notice. Okay, now keep in mind we do have oil inventory data today. We did of course get that very big drawdown last week. We got another big draw of 4.5 million barrels yesterday. We will of course get the updated API data later on today. So again, that data is perhaps a little bit secondary. However, as we saw last week, it was very, very suggestive of still a very strong demand in the near term for barrels of oil. Okay, so keep a close eye on that. I do think that's going to ultimately give the market a little bit of a boost today. But like I said, this is not a market to be aggressive. It's very much a market to buy it towards 64 and of course sell it around that $68 a barrel and keep trading within this range. Now, key, of course, we know Trump has got a lot on his desk. Of course, Iran-Israel is going on. Of course, we know he wants to get the tariff situation resolved with just over a week to go now until that deadline ends. We know he wants to get the big beautiful bill passed through the Senate, back to the House, and passed on his desk so he can sign it through. So there's a lot going on for the president, and that's perhaps why he did lash out yesterday. Okay, that's very unusual behavior from the president, and of course it does point to a situation where you can see he's under a lot of stress. Now, key to all of this, and I think it's important we discuss this big beautiful bill because there's a couple of things to be very, very switched on for. We know to date the Republicans passed over a deal or a bill to the Senate that will prove to add to the deficit by $2.8 trillion. And so that's what we know. We know it will be inflationary. We know it will be very positive for the stock market. That's what we know. Okay, and that goes without saying. If you're going to pass this deficit bill, ultimately you are going to prop up the stock market, and we are going to see a little bit of higher inflation expectations in the near term. Okay, now what is key and what's going on is ultimately we know that Trump wants this deal done before Independence Day, before next week Friday. Okay. However, we can see there's quite a few Republicans, both conservative and less conservative, that are wanting certain things in the bill and out of the bill. Okay. And so what that is leading to is some lawmakers say that we may only be able to pass this in August. Now that matters because we do have a deadline ultimately, which Scott Bessent has been telling us about, which is the federal deficit needs to be extended. Otherwise, we're going to run out of money again. Now, again, I know you'll probably read a couple of headlines about this, and it's very much scaremongering. The US has not yet ever run out and defaulted, and we've seen this over a number of years. Okay, this sort of problem comes up every couple of years, so it's not problematic in its own, but if they are not going to get this deal passed by the 4th of July, and we are going to enter the summer, what that does increase is the likelihood or the risk of a government shutdown. Okay, and again, the markets are looking for something to latch on. Okay, there's nothing really going on at this moment, and so this may be something they want to latch onto. It may be a little bit of a narrative they want to latch onto. So keep an eye on this as we move, of course, into the latter half of next week. However, Bessent did tell us yesterday he does think this will get done before the 4th of July. Now, the important thing to stress is that we did also see Senate Majority Leader John Thune tell us that they will get the bill passed this week. And of course, House Speaker then said, well, if they can hand it over to us this week, we should be able to get that through the House next week. Now, what does this all mean for markets? Well, like I said, it's very positive for equities. Okay, if it gets passed in its current form, if the Republicans, if very little changes from what the Republicans handed over via the House, I do expect it's going to be just rocket fuel for the equity markets. Okay, absolutely nothing bearish about it in terms of the risk markets. For the bond markets, okay, perhaps it will prove to be a little bit inflationary, but we just don't know. Okay, we don't know how the spending is going to get done, but what we do know is that it will add a little bit of inflation expectations. And again, we know that rates should move a little bit higher, but it's about the absolute level of rates. Okay, now with that in mind, as we move into today, of course, we can expect a little bit more of what we got yesterday, which is that grind higher type price action. We know the Nasdaq's now into record high territory, and I expect that to continue today and tomorrow, of course, into the end of the week. Okay, now in terms of the play of the day, it's Mr. Captain Condor's back again. What that means is the market is going to remain pinned, but what I want to show you in terms of the gamma as well as the VIX, as you can see, we've got a little bit of a overnight VIX gap there. I do expect that to get filled. Now, what does that mean? It means I do expect you're probably going to have a little bit of a wash down in terms of prices in the S&P. Maybe we'll find ourselves down 10 points in the day, and that is going to be your golden buying opportunity. When you find yourself down 10 points today in the S&P, 15 points, maybe 50 points in the Nasdaq, you're going to have to step in and buy that up, because we are going back up towards record highs now in the Nasdaq, and I do expect over the next couple of sessions S&P will find its way there too. Now in terms of the Captain Condor, you can see it there with the gamma. It's this sort of situation where the market's going to remain pegged between the 60.50 and the 61.20 in the SPX. I'll show this to you in the futures in a minute. But what that means is we're likely to sit between these two price points and move ultimately nowhere. Okay. Now in terms of the actual prices, you can see I've illustrated it for you in terms of the profile here. The 61.75 is the top of the condor. Okay, so effectively somewhere around 61.75s, that's where we should run into some form of gamma hedging, which is just going to keep the market pegged or ultimately provide quite a bit of sell side activity. So you're not going to see it get above there very easily. And then of course to the downside, that 61.10 is going to provide some significant support. And like we know, that was yesterday's cash low. It is of course the weekly high as well. So there's a number of reasons, both technical, both gamma, both from a volatility perspective. There's a number of reasons for us to sit inside this range between 61.10 and 61.75. Also, like I said, don't be surprised to see a little bit of a wash down. You can see we've got a little bit of a ledge here, a little bit of a wash down at some point. Maybe we get a lucky fill around those 61.30s, but once it tags that price, you can expect not only are we going to make our way back to the overnight highs, but we're also likely to extend it. Okay, one final note, like I said, not markets to be aggressively buying in. You don't want to sit there buying 61.50, because ultimately you are going to get a lot of sideways two-way trade. It's very much about picking those spots, buy those 61.30s, because that's where you're going to get maximum risk reward. Okay, with that in mind, if there are any other questions, do post them in the Discord channel. Otherwise, like I said, it's expected to be somewhat of a quiet session. There's going to be work to do. There's always work to do, but it just means we've got to adjust how we do our work. We can't be too aggressive. We can't be lumping on too much leverage, because these are just not the conditions for it. Okay. Otherwise, if there are any conditions or questions, like I said, do post them in the Discord channel. For those of you that watch live on YouTube, don't forget to like and subscribe and share and comment and all those wonderful things. Otherwise, good luck out there. Manage the risk. Go make some money.